Hello, everyone. Welcome to the webinar. We are going to wait 5 more minutes to wait for other people for joining the meeting. So, welcome everyone. Welcome to this webinar hosted by Evolution Europe and in partnership with Lightbringer. Today we will talk about the patent strategy for EU funding success. We will start this webinar by doing a quick introduction of ourselves. So I'm happy today to welcome Ola that is working at Lightbringer. Hi, Ola.
Hello, Alice. Nice to be here today.
So Ola is a serial entrepreneur with over 20 years of experience in the tech sector. He was CTO and co-founder of Flatfrog, where he led the development and management of more than 300 patent families. And today he is the CEO and co-founder of Lightbringer. On our side, I'm Alice working at Evolution. I am a startup funding advisor. And as we mentioned already, this webinar will be focused on the patent strategy for EU funding success for your startups. So we will go across different topics to help you to understand how you can protect your technology and go through the patent process. So let's start with the first question. Let's start with the first question. Ola, what is the purpose of a patent beyond legal protection?
Yes, so very good question. And let me start by saying that patents is not necessarily technology protection. They are business protection. So, and most of the time, you don't want a patent for the actual legal battle. You want to stay far away as you can from any type of courtroom or legal battle. So especially in the early stages, a patent is a lot about who owns the rights to something. And that has massive impact, for example, on funding, both for venture capital, but also for public funding. So it's important to remember that there is no such thing as copyright in deep tech and hardware and life science. Others are allowed to copy your technology unless you have patent protected it. And investors and funding managers, etc., they know this. So and you need to be aware of it as well. So it has massive business impact apart from whatever legal coverage that you could potentially have in the future.
Thank you for this insight. As you mentioned, it's key for your startup to have protection of your technology, and it will be also really important when you will reach investor to invest in your projects. So let's go to the second topic. How early should an invention be protected? At which stage exactly should the founder of a company think about this IP strategy?
So the IP strategy is one of the very first things you should think about when you actually start a company. Quite often you should think about it before you start the company. because how you set up the company will be somewhat dictated by how your IP strategy is set up. And IP is just not patents. IP is trade secrets and patents and trademarks and every know-how, source code, everything that goes behind it. But when it comes to specifically patent protection, it's important to note two things. First of all, you can't protect something that has been made public. So, for example, if you're a researcher and you're publicizing an article, that means that you lose all rights. If as soon as that article is public, without being patented first, it's public domain and everyone can use it. And secondly, is that the way the patent system works, the first 12 months after you file the patent, you can make a lot of adjustments and changes to it. So what I typically tell people is that you should protect something 12 months before you intend to show it to anyone. Because there's another thing about the patent system, which is first to file. It doesn't matter who actually invented something first. The only thing that matters is who patented it first, who filed the patent application. So even if you invented something and someone else patents it, you lose the rights. So typically 12 months before you intend to show it is a good guideline of how early you should be doing your protection.
Thank you. Thank you for this constructive answer. I would like also to ask you more detail about exactly at which technology readiness level should the founder think about that? Do you have some insights regarding exactly at which TRL the founder should think about the strategy?
Yeah, so the thing is that you can think about this already at TRL 1, basically when all you have is a concept. If that concept is novel and you manage to somehow get funding to evaluate that concept, that is when you should start thinking about this. You could even consider it to be TRL 0 because even before you start, you should have an idea on how you want to commercialize it. Because it's very important to understand that if you don't have a commercial goal somehow, people will never invest in your company or give you funding. You don't get funding just because someone thinks it's fun. They do it because they think you can actually build a business around it.
Yes, yes. As soon it is, better it is. A quick reminder for our audience: the TRL is a scale that has been created by NASA that help you to understand what is the exact maturity of your technology, and it will also help other people, audience that will present your technology to understand exactly at which stage of development you are. Also, another reminder, you have the chat. If you have any question, don't hesitate to write questions there.
But maybe just one follow-up there, Alice.
Yeah.
Great that you mentioned the TRL scale because the amount of patent protection that you need increases the further along the TRL scale you are. So you need a lot less protection in the early phases and a lot more in the late phases.
Okay, thank you for this info. Let's go for the next question. So what is exactly a patent portfolio? It's a specific concept that we are not all familiar with, and how is it different from owning a few patents?
So the thing about patents, and this is a deep, dark secret that people won't tell you until it's too late, is that there's nothing such as black and white when it comes to anything that has to do with legal. So anything that has to do with legal has gray zones, and it's not actually until in the very late stages that you know what your patent has protection for. So think of it like you're at the horse race and you only bet on one horse. The odds of you winning that race is fairly small. So you need to make sure that you have a good chance of actually getting full protection. You need to file more patents. And the main reason for this is that no one can predict the future. No one can predict exactly which part of the technology that will be determined to be the winner. If you look at a lot of technology companies, a lot of their development went nowhere and they pivoted. And especially as a startup, you will likely pivot. And if you only have a single patent or two, it's a high likelihood that it won't actually cover the thing that becomes commercially viable and successful. So what you do is that you create a portfolio of basically multi-layer coverage. And in the beginning, you can't afford a portfolio. So this is something that you build up over time as you become more and more successful. And again, if you're looking for funding, in the early stages, people won't expect you to have a portfolio. But in the later stages, they certainly do because it means that you have understood how it works.
Yes, yes, exactly. Actually, we have a question connected to what you just mentioned, Ola, from Armin. Thank you for the question. So he is asking, can software be patented? And how about pure software without a hardware component?
Yep. So software can absolutely be patented. Software patents are a lot stronger in the US than in Europe. If you wonder if software can be patented, just look at the patent portfolios of Microsoft and Google and Apple, etc. For a startup, you need to be a little bit careful when you patent software, and you need to be able to basically look at the reverse engineering test. Can someone looking at your end product without having access to the source code figure out how it's done? If the answer is yes, then you have probably a good basis for patent protection. That said, one thing that is happening a lot now and a very heavy trend that we're seeing is method patents with AI. So basically, think of method patents as flowchart patents. If you have figured out the way of making a more optimal flowchart where part of the boxes are AI, then that is a very hot trend right now to patent because you can basically block people from using your method. Uh, but you should be more careful if you don't have a hardware component. But one important thing is that it doesn't have to be your hardware component. So as an example, uh, if you're building a software that is using the sensors on a cell phone, if you're using the camera or mic on the cell phone to take information from the real world and then process it, that is highly patentable because it's not about the hardware component, it's about being connected to the physical world. If you have anything in your product that comes from the physical world, and that includes all types of sensor data, uh, pictures, video, audio, any other type of sensor you can think of, then you have something patentable, even though it's not necessarily your hardware component. How about using a browser to follow up on your question, Armin? Uh, think of this again, this method and flowcharts. There are absolutely things that you can do in the browser, but the patent becomes much stronger if it's somehow connected to the real world. But let's say that you're using the browser to record sound and video from a user and then uh, fix it somehow with AI or software. Yes, then you have something.
Thank you, Ola, for these insights. Let's move to the next topic. How does a patent portfolio influence a company's evaluation during funding rounds?
Yeah. So as you go larger up in the funding rounds, the patent portfolio becomes a bigger and bigger part of your valuation. In the very early stages, I typically like to say that you need most likely a checkbox patent. You basically need a patent to put it as a checkbox versus different types of funding versus VCs versus EU funding. They just need to know that you know what you're doing and that you've understood that you need a patent. So you should try to minimize the amount of spend that you do and focus on building the business instead. But especially as you're going into seed round, Series A, Series B, it becomes more and more important. During a Series A fundraise, you will have a patent due diligence if you're a deep tech company. You will have patent experts and technical experts look at what you've done on your patent. And if you're in Series A and don't have a patent portfolio, it's a massive red flag. So, part of your seed funding going into Series A needs to be put into making something that is, again, suitable for your type of company as it goes to Series A.
As we are talking about funding rounds, could you give us some information regarding the potential budget that should have a startup, prepare startup for this IP strategy and this portfolio?
Yep. So again, it comes back to patents not actually being technology protection, they're business protection. So what you should think about is how large is the potential business that you're protecting? And the business includes your funding. So as an example, if you're expecting to raise 10 million euros, and on top of that, you're expecting to have 5 million euros of revenue of some early projects that you're running, essentially the business that you're trying to protect is 15 million euros. And then depending on what type of business you're doing, you range typically between 0.5% and 10% of that goes of basically your business you're protecting that goes to patents. And what is the variable? Well, the variable is your business model. If you're a software company that is trying to do everything yourself, that percentage should be very low. If you're a hardware company that shows a lot, then it should be higher. But you're still trying to sell the product yourself. You might be in 1%, 2%, whatever. The 10% is when you're actually building a licensing company. So you're not intending to sell the product yourself. You're intending to license out the technology to other people. This is very common, for example, in semiconductors and telecom, but it's coming more and more common in life science as well. Essentially, the value you're building in the company is in the IP portfolio. And of course, then you need to spend more money. If anyone needs like personal advice for your company, feel free to reach out to me. I can give you a short like patent strategy because it's very, very dependent on exactly what type of company you're building. And take that with you, the type of company you're building, not the technology that you're developing. It's focused on the business, not specifically the technology.
Yes, yes, indeed, and also depending a lot on your sector, I will say as a deep tech sector is really large. You are facing all different challenges, and so you could have different budget for that. We have also a question in the chat regarding the difference between platform patents and patent portfolio. Could you explain a bit more the difference between both?
So these are completely different things. Just to make it clear, a platform patent is typically a conceptual patent where you try to file something very, very broad on your technology to essentially cover everything that you're intending to build. That is typically a very good first patent to file, especially if you're in the very early stages of development, because it gives you a lot of freedom to operate. Like it opens up a lot of opportunities for you. It's not a portfolio, it's one. And the business value of a platform patent or conceptual patent is typically very high. But the legal value is not necessarily as high as it might be too broad. A conceptual platform patent should always be then complemented with other types of patents, component patents, product patents, system patents that build up a patent portfolio. And I can also take the other question that we missed here because it kind of relates to this. So this is our core secret sauce is a proprietary scoring formula algorithm. Is it realistically protectable via patent? You can patent that. I don't recommend you to do it because you kind of said it yourself. This is your secret sauce. So, and if you like fundamental pillar of the patent system is that anything that you patent will become public after 18 months. So if you patent your secret sauce, you're essentially giving it away, and it will be very hard to show that someone else is infringing because you would need access to their source code. And that means that you need to convince a judge to give you access to their source code. So even though it's theoretically highly possible to patent that type of formula or algorithm, you're doing yourself a disservice by doing so. What you should instead be doing is that you should look at the product that your secret sauce protected, and from that end product, you protect all the things that can be seen and reverse engineered on the end product, and you keep that secret sauce as secret as you can.
Thank you. Well, now we are going to talk about the red flags during the patent journey. Could you give us some red flags you have seen through your experience at Lightbringer and also as the founder of a company?
Yep. So I've advised close to 200 startups now on their patent strategy and patent journey. So I've seen quite a lot of these red flags. The first one is that the founder is a deep tech founder who says they don't care about patents. So that's not an okay answer. You can say we won't patent because, and then you have a reason for why your company doesn't do patents. That's a perfectly valid answer, that you've looked at this and you've decided it's not a good idea. And then the investor or customer can do whatever they want with that information. It might be right, it might be wrong. But if you say that you just don't care, then you're actually telling the other side that you don't know what you're talking about. And even if you don't have the money to patent something, you need to make sure that you've understood how it works and you are taking the risk. For example, again, going back to this secret sauce, you know that it can be patented, and you can tell people that, yes, we actively are intentionally not patenting this because this and this reason. So having a complete lack of understanding of how the system works because you don't think it applies to you, that's a red flag. Because the patent system is like a game. People don't stop playing it just because you don't like it. And you will get played. So the second thing is actually that people protected their secret sauce. So some engineer was very proud of what they had done and wanted a patent for it. That is not what you should be doing. It doesn't matter how many hours you spent on the idea. So think of it like this. If you're patenting your secret sauce and you spent 1,000 hours on developing it, or 2,000 hours, 18 months later, that will be open to public. So instead, you should look at the end product and you should figure out which are the things that are actually visible on this that will be immediately copied if once we go to market, that you should be protecting. And the third red flag is having no budget. So basically thinking that you can do patents without money, or even worse, saying I can do this myself. Because it's like doing patents yourself, especially if you're an engineer, because engineers typically sometimes overestimate their own skills in other fields than their own field. There is a reason why there are attorneys, because there are so many gray zones. And if you write your own patent, or if you use something that has a very low quality, what you're risking is that you're actually making something public and you're not getting the protection that you thought you would get, because there are so many gray zones. So instead of filing your own patent, then it's just better not to file anything, because at least you didn't hurt yourself. And when you know that you should be doing it, you need to get the budget. Because imagine going to your board and saying, I'm not going to do a budget for my R&D project. We're just going to wing it. That's just as stupid as saying, I'm not going to do a patent budget because we'll just take it as it comes. Because what happens if you file a patent and after 2 years you can no longer afford to pay for it? It means that you lose the rights and it becomes public domain. So now you've just paid money to tell the world how you do something. So you need to understand what it costs over time. It's actually one of the things that we've changed at Lightbringer. We've made the patent buying journey more price predictable, but it's still expensive because there's still attorneys and there's still government entities involved and things like that. So I would say those are my top three red flags. I see that we have another question here. You seem just clarifying. If we offer something software as a service, our source is always secret. Infringers will not be able to prove we're infringing, right? No, is the answer to that one. If someone can prove on your so put it like this, if someone can look at your end product and convince a judge that you are actually infringing on someone else, they will grant in the US something called discovery, which means that they will get access, not the competitor or whoever else, their attorneys will and technical experts will get access to all your source code, all your email conversation, all your documentation, everything. So if you're actually copying something that can be seen on the source, that can be seen on the end product, but it's inside your source code, you're in big trouble. So you need to, and this is what I'm talking about. When you talk to investors, you at least need to understand the risk you're taking, and you need to be the investor needs to be okay with that you're taking that risk. You basically need to understand the game. Otherwise, you're in trouble.
Thank you, Ola, for this insightful answer. It is one of the most important topics of our webinar today, understanding the different red flags you could face during your patent journey on the development of your technology. Of course, we are recording this session, and you can see another time what are the different red flags. I will also complete your answer saying that you were talking about the audience, the message that you're sending to your audience about not investing in patent strategy or not thinking about the budget you will invest on it. I will just remind the audience that in terms of audience, we are talking, of course, about non-dilutive money, but also of dilutive money. So it's exactly the same thing if you're talking to, for example, the EIC jury, and if you're on the EIC accelerator process, for example, or with a VC, a business angel, or family office. This answer is working for both audience in this case. But let's move to the next question. So what is the best strategy when the patent budget is limited?
Yeah, so early on, you likely have very little money. This is the case for everyone. And if you have no money, then the only thing you should be doing is keeping things secret until you're actually able to get some money. You need to build your business before you build anything else. Like if you put money into patent and you don't have a business, it's essentially you're building a large moat around your little tent. You need to actually build a castle as well. So you need to build your business before you spend time and effort and money to actually put into patents. But when your patent budget is limited, there are two things that you want out of any money you put into patents. The first thing is you want to get investment. So, and that investment can be, as Alice said, either through dilutive funding, angels and VCs, or non-dilutive funding, as in EU funding. And very often, both of those require that you have a patent checkbox. You have something, but what they also want is that you have freedom to operate. That you essentially have the opportunity to bring this product to market. And you can actually combine those two by filing a high-level conceptual patent about your entire business that you're intending to build. So essentially, you can show your patent and say, look, we've actually protected this whole thing, so we have freedom to operate. And that is one of the best things to do very early on when your patent budget is limited. And then as your investment and revenue grows, then you grow your patent protection, not before.
We have another question in the chat about a defensive strategy for the patent portfolio, and if it is a biotech, and specifically in the US. As we said before, we also recommend you to contact Ola through LinkedIn, or we will share the email of Ola. Of course, it's each sector has its own strategy, but Ola, please, if you want to give us some words regarding that, feel free.
Yep. So the question here is, what about the defensive strategy? How do we handle it if we're biotech, if there are any specificities regarding the US to take into account? So first, let me say, any Western country needs to take US into account, because that is where patents are worth the most money. And it's also where you will almost guaranteed get sued. If you do something bad in the US, that's where you get sued, and that's where it will cost a lot of money. So you can't just ignore the US unless you're intending to completely not use that market. But the US is such a big market that almost no investor will look at you if you don't say that we have US as a market. So I would say everyone should kind of think US first when it comes to patents. And it's not because the patent system is better in the US, it's just that there is more money in the patent system in the US. And it's a higher likelihood that you will get sued in the US compared to Spain or France or Germany. So a defensive strategy is essentially you're trying to build a portfolio so that you can sell your product. And this is the most common thing. If we look at all our clients, 9 out of 10 are building a defensive strategy because you're not intending to license it. You're not intending to go after it. You just want to be able to actually sell your own product and not be blocked by others. So what you need to do is, just as I said, very early on, you likely want to file this conceptual patent trying to cover as much as you can, and then you need to build a portfolio. And that portfolio needs to scale with your investment and your revenue. Because for a defensive portfolio, you should see your patent portfolio as tech insurance. It's basically insurance that no one comes and takes your house away. And the boring thing about building a defensive portfolio is that it will just be a cost center all the way up until it actually saves your ass. So it's just like insurance. You pay for it and nothing happens. And the best thing that can happen in the world is if nothing happens. So, but you need to have this in mind, and you need to basically follow the general patent strategy of start with something small and then grow it based on your business. And you absolutely need to have US patents and likely European as well. That's why, by the way, at Lightbringer, our default package is United States plus Europe, because that will be your almost guaranteed most of your market.
Yes.
So I can follow up with this. A conceptual patent as it is broad is unlikely to be accepted. You are right here, but the way I'd like to think of it like this, let's say that there is a 5% chance that it gets accepted. What if a competitor files that patent? Then you are absolutely screwed. So like this first conceptual patent is more about freedom to operate. What if someone filed this patent and it actually got granted? That's how you should be thinking about your conceptual patent. And the thing is that when you show it to investors and customers, they honestly don't know if it will be granted or not. It still looks great. And the way the patent system works is that probably one golden nugget in that patent that you filed. And as you go through the process with the US Patent Office and the European Patent Office, you can narrow it down so it just protects that part that's actually valuable to you.
Perfect. When if you have any other question, don't hesitate to send it in the chat. And if not, we will thank you for attending today this webinar. It has been recorded, so you can find it on YouTube, and we will share it on our social media on LinkedIn soon. And yeah, I will thank you, Ola, for giving us your opinion today about the pattern journey of startup. Thank you, and yes, don't hesitate to send any question if you're in the chat if you have some.
Thank you. And as I mentioned, if someone of you want private advice, things that you didn't want to share with others, feel free just to reach out to me directly. I'll be happy to set that up.
Thank you.
Thank you.
So I will close the session now. Thank you all, and as Ola mentioned, don't hesitate to send questions by email or LinkedIn. Bye.